Welcome back, everyone. What if I told you that behind every headline, every breaking news alert, and every political drama, there's always one invisible force pulling the strings: money, power, and influence? Today, we're diving into a story that most people scroll past without truly understanding. On the surface, it looks like politics, maybe even conflict. But underneath, it's about resources, global control, and who really benefits when nations collide. You see, smart investors and thinkers don't just watch the news, they decode it. They ask one simple question: who wins when this happens? And the answer usually isn't obvious. In this video, we're going to break this down logically, step by step, without hype, without fear, just pure clarity. By the end, you'll see this situation from a completely different angle. And trust me, it might change the way you look at world events forever. Most people think geopolitics is driven by ideology, morality, or national pride. But if you zoom out and follow the money, a very different picture starts to appear. Venezuela isn't just another struggling country in the news cycle. It quietly sits on one of the largest proven oil reserves on the planet, a resource that still powers industries, transportation, military operations, and entire economies. Oil isn't just fuel, it's leverage. And whoever controls large reserves doesn't just influence markets. They influence political decisions, alliances, and even wars. When energy prices move, inflation moves, currencies shake, and investors react. That's why powerful nations pay extreme attention to regions rich in natural resources, even when those regions appear unstable or risky. In Venezuela's case, years of mismanagement, sanctions, and political turmoil have limited how much oil actually reaches global markets. This creates artificial scarcity, pushing prices higher and increasing dependence on other suppliers. From a strategic perspective, reopening or controlling that flow could stabilize certain markets while giving enormous bargaining power to whoever manages the supply chain. Think of oil like a massive financial asset that generates cash flow every single day. If that asset is frozen, restricted, or redirected, the ripple effect touches everything from gas prices at your local station to stock portfolios and government budgets. Now, here's where it gets interesting. Governments rarely say, "We're doing this for money and resources." The public narrative is usually framed around security, stability, or justice. That makes sense, because no one likes to hear that human lives and international tension are sometimes weighed against economic interests. But history shows a consistent pattern. Regions rich in oil, minerals, or strategic trade routes often become hotspots for intervention, pressure, and influence campaigns. It's not emotional, it's mathematical. Control over energy equals control over economic momentum. If you look at it through an investor mindset, the logic becomes even clearer. Energy is a foundational sector. Every factory, shipment, airline, and data center depends on it. When supply becomes uncertain, volatility increases, and volatility creates both risk and opportunity. Nations operate with a similar logic, except their portfolios global influence rather than stocks. Securing access to reliable energy sources reduces vulnerability and increases negotiating power on the world stage. Another layer most people ignore is how oil impacts currency strength and trade balances. Countries that export energy generate massive foreign currency inflows, strengthening their financial position. If that flow shifts, entire economic structures can tilt. This is why oil-rich nations hold disproportionate influence compared to their size. It's also why external powers monitor and sometimes attempt to shape political outcomes in those regions. Not necessarily to occupy them physically, but to influence how resources are managed and who benefits from them. From a psychological standpoint, this kind of strategy operates quietly. It's not about dramatic announcements. It's about slow pressure, incentives, sanctions, negotiations, and positioning. Markets don't react to speeches. They react to supply expectations. If investors believe oil flow will increase or stabilize, prices adjust instantly. If uncertainty rises, markets price in fear. That tells you how sensitive the system really is. When you start connecting these dots, you realize global decisions are rarely random or emotional. They're calculated, layered, and driven by long-term positioning. The average person sees a headline. Strategic planners see decades of energy security, market dominance, and economic leverage. And once you understand this lens, You stop reacting emotionally to news and start analyzing it logically. The same way smart investors analyze trends, risk exposure, and future upside. At first glance, most international conflicts are presented in clean, simple stories. One side is framed as protecting justice, security, or democracy, while the other is labeled as dangerous or irresponsible. These narratives are easy to digest, emotionally powerful, and designed for mass consumption. But the real world rarely operates in such straight lines. Beneath every official statement lies a complex web of incentives, risks, economic pressure, and long-term strategy. The public version of events often functions like a headline for a stock attention-grabbing, but incomplete without the financials underneath. When governments communicate with citizens, they focus on reasons people can emotionally connect with: safety, crime, prevention, humanitarian concern, and national pride resonate more than discussions about trade routes, currency influence, or energy markets. Yet decision-makers almost always prioritize outcomes that protect national leverage and economic stability. This disconnect between what is said and what is strategically pursued creates a gap most people never question. They accept the surface explanation because it feels logical and comforting. However, the deeper motivations often revolve around influence, positioning, and long-term advantage. If you think like an investor, this behavior makes perfect sense. Companies don't announce every internal motive behind a merger or acquisition. They highlight growth, potential, synergy, or innovation, while quietly pursuing market dominance, cost control, or competitive elimination. Nations operate in a similar way, just on a larger scale. The messaging is designed for public approval, while the strategy is designed for power sustainability. Once you recognize this pattern, you begin to analyze political moves the same way you would analyze a balance sheet, searching for what's hidden between the lines. Another key factor is perception management. Controlling the narrative shapes how allies, markets, and citizens respond. If a move is framed as defensive or humanitarian, it reduces backlash and builds legitimacy. If it were framed as resource competition or geopolitical dominance, resistance would grow rapidly. Narrative control becomes a strategic asset, not just a communication tool. Markets respond to stability and predictability, and narratives help stabilize reactions, even when underlying intentions are more aggressive or calculated. This also explains why policy decisions often feel inconsistent or contradictory. One year cooperation is encouraged. The next year sanctions appear. Then negotiations reopen. On the surface, this looks chaotic. But when you track the underlying incentives, the pattern becomes clearer. Pressure is applied to reshape behavior, create leverage, or force concessions. It's a chess game, not a moral debate. Each move is designed to improve positioning for future rounds, even if it temporarily disrupts relationships or public opinion. The danger for everyday viewers is that emotional narratives can distort judgment. Fear-based headlines trigger impulsive reactions, just like panic selling in financial markets. But disciplined investors know that emotional decisions usually lead to poor outcomes. The same principle applies to understanding world events. Instead of reacting to dramatic language, it's smarter to observe trends, incentives, and power shifts. Who gains leverage? Who loses flexibility? Which sectors or regions benefit economically? When you train your mind to think this way, you stop consuming news as entertainment and start treating it as data. Every announcement becomes a signal. Every policy shift, a potential indicator of deeper movement. Over time, this mindset builds clarity instead of confusion. You begin to separate messaging from mechanics, emotion from strategy, and noise from real influence. That's how informed thinkers stay ahead, not by predicting headlines, but by understanding the forces that quietly shape them. Power in the modern world is rarely displayed only through armies and weapons. It's expressed through influence, alliances, economic pressure, technology control, and strategic positioning. When a major nation makes a bold move in a region, it sends a signal far beyond that single border. It communicates dominance, capability, and willingness to act. Other countries observe carefully, not just to judge morality, but to recalibrate their own strategies. Influence works like momentum in markets. Once a player demonstrates strength and consistency, others adjust their behavior to avoid risk or to align with perceived winners. In the Western Hemisphere, historical memory plays a powerful role. Past interventions, alliances, and conflicts have shaped trust levels between nations. Every action is filtered through that historical lens, which means even neutral decisions can feel threatening or symbolic. When a superpower increases its presence or involvement in a neighboring region, smaller nations reassess their own security, trade partnerships, and diplomatic posture. This isn't about fear alone. It's about survival and opportunity. Countries want to stay relevant, protected, and economically connected to the strongest networks. From a strategic standpoint, influence creates leverage without requiring constant force. If a nation can shape political outcomes, economic policies, or leadership direction in a region, it gains long-term advantages in trade routes, resource access, and military positioning. This type of influence compounds over time. Similar to compound interest in investing, small gains today can translate into massive strategic benefits decades later. That's why global powers invest heavily in diplomacy, economic agreements, development funding, and cultural outreach, alongside military readiness. Another layer often overlooked is how these actions impact global confidence. Investors, corporations, and financial institutions respond to stability and predictable leadership. When a powerful country demonstrates control and strategic clarity, markets interpret it as reduced uncertainty. Capital flows toward perceived safety and leadership. Conversely, when influence weakens or becomes fragmented, volatility increases. This dynamic connects geopolitics directly to financial markets, currency stability, and long-term economic planning. Symbolic actions also shape alliances. Allies seek reassurance that partnerships are reliable and strong. A decisive move can reinforce trust among partners while discouraging rivals from testing boundaries. It's not always about immediate gains, but about setting expectations for future behavior. Once expectations are set, they guide negotiations, investments, and defense planning. In many ways, global politics functions like reputation in business. A consistent track record builds credibility, while inconsistency invites challenges. Public reactions often focused on visible drama, but strategic planners focused on invisible shifts in balance. Who now feels more secure? Who feels pressured? Who gains bargaining power? These questions determine future decisions long after headlines fade. Power projection reshapes the mental map of influence across continents, affecting decisions that may not surface until years later. At the individual level, understanding this dynamic helps avoid overspending. It's easy to see global actions as isolated events or emotional reactions, but they are usually interconnected pieces of a long-term strategy. Just as successful investors think in decades rather than days, powerful nations plan in cycles, not moments. Recognizing this mindset allows you to interpret world events with greater clarity, patience, and strategic awareness, seeing beyond surface narratives into the deeper currents that quietly shape global direction. International resource management is one of the most subtle yet powerful tools a nation can use to influence global politics. Control over vital commodities like oil, gas, and rare minerals doesn't just determine a country's economic strength. It also dictates its diplomatic leverage, military readiness, and long-term strategic positioning. When a nation has the ability to redirect the flow of these resources, it effectively holds a form of soft power that rivals traditional military might. The mere expectation that resources could be limited, withheld, or redirected changes the behavior of other countries, forcing them to negotiate, comply, or adapt to shifting realities. Oil, in particular, serves as both a commodity and a currency of influence. Countries that export significant amounts of energy can use their supply to incentivize allies, pressure competitors, or shape regional stability. Revenue generated from controlled resources strengthens national budgets, funds infrastructure, and supports technological advancement. On the other hand, restricting access can destabilize economies, create inflationary pressures, and increase dependency on external powers. This interplay between availability and scarcity turns resources into strategic assets that are constantly monitored, assessed, and leveraged in high-stakes decisions. When external powers intervene, even indirectly, they often aim to influence who controls the flow of these resources. Policies, sanctions, or agreements may appear to focus on governance, human rights, or security. But beneath the surface lies a complex calculus of economic and strategic advantage. A nation that controls production, export channels, and revenue collection can effectively dictate terms, not only within the target country but across entire regions. This makes resource management a form of geopolitical chess, where every move is calculated to maximize leverage and minimize risk. The ripple effects of controlling resources extend beyond immediate economics. Investors and markets respond almost instantly to perceived stability or disruption in supply chains. Energy price fluctuations can impact global trade, commodity markets, and even national currencies. This means that decisions made in one country can send financial shockwaves around the world, affecting everything from commodity futures to pension funds. Nations understand this implicitly, which is why influence over key resources often becomes a central pillar of foreign policy and strategic planning. Another dimension of resource control is its role in political legitimacy. Leaders who can stabilize supply, generate revenue, and create prosperity gain domestic support and international credibility. Conversely, when resource flow is disrupted, it can weaken political authority, fuel social unrest, and create openings for external influence. This dual effect makes resources both a shield and a weapon, simultaneously protecting leadership and offering leverage over others. In Moneywalas, the most effective interventions, Dante relies solely on force, but on shaping the economic and political landscape through careful management of vital assets. Strategically, this approach emphasizes long-term thinking. It's not about immediate conquest or short-term gains, but about establishing enduring control and influence. Resource allocation becomes a predictive tool, one that anticipates reactions, pressures adversaries, and builds opportunities for negotiation or cooperation. Nations that master this game position themselves advantageously for decades, creating both stability for themselves and dependency for others. By understanding these dynamics, observers can start to see patterns in international actions, recognizing that behind every headline, resource control often drives the most critical decisions. Global actions rarely happen in a vacuum. Every military move, political maneuver, or economic policy triggers reactions from allies, adversaries, and neutral observers alike. When a powerful nation undertakes a controversial action, the international community immediately responds. Through statements, sanctions, negotiations, or strategic realignment. These reactions are rarely just about ethics or ideology. They are about signaling, deterrence, and protecting national interests. Countries calculate their responses carefully, balancing economic, military, and diplomatic consequences to ensure they maintain credibility while avoiding unnecessary escalation. Legal frameworks and international norms play a surprisingly powerful role in shaping reactions. While some nations may support a controversial move, others condemn it under the guise of international law. These debates are not purely academic. They influence legitimacy, alliances, and public perception. A nation that appears to violate law or establish conventions risks diplomatic isolation, sanctions, or reputational damage. Conversely, if a controversial action is framed as compliant with law or necessary for security, it can gain tacit support, even from those who privately disagree. The framing of legality and legitimacy is therefore a strategic tool used to manage risk and shape perception in the global arena. At the same time, controversy itself is leveraged strategically. Public disagreements, media scrutiny, and debate in international forums serve as signals to both allies and adversaries. Allies gauge commitment and consistency, while rivals gauge weakness or overreach. Every statement, tweet, or press release becomes part of a broader information campaign, subtly influencing markets, diplomatic negotiations, and internal stability. These ripple effects are often more significant than the immediate outcome of the action itself, shaping the political landscape for months or even years. Economic leverage is a particularly important factor in how nations respond. Control over trade routes, resource flows, and financial systems means that reactions are never symbolic alone. They have real, measurable impacts. Sanctions, tariffs, or restrictions on access to markets can pressure governments to alter behavior without firing a single shot. Similarly, promises of investment, aid, or favorable trade agreements can incentivize alignment or cooperation. Inticency controversy is a tool to redistribute influence economically as well as politically, demonstrating that power operates through both tangible and intangible channels. Finally, The reactions of the global community also shape internal perception within the country initiating the action. Leaders are acutely aware of how international response affects domestic legitimacy. If a move is condemned globally, it can fuel opposition, erode public confidence, or create political vulnerability. If it is supported or tolerated, it reinforces authority and strengthens negotiating position. This interplay between external reaction and internal stability illustrates why controversial decisions are rarely impulsive. They are the product of extensive calculation, anticipation, and scenario planning. Understanding these dynamics reveals that global reactions are never just moral or emotional. They are carefully orchestrated signals in a complex, high-stakes game of influence, power, and long-term strategy. When you step back and look at the bigger picture, it becomes clear that global events are rarely what they appear on the surface. Headlines and official statements only scratch the surface of a much deeper game, one driven by strategy, influence, resources, and long-term positioning. Every decision, every intervention, and every reaction is carefully calculated to protect leverage, shape markets, and secure power for the future. Understanding this gives you a completely different perspective. It teaches you to see beyond emotion, fear, or opinion, and to analyze the forces quietly shaping the world. The more you connect the dots, the more patterns emerge, and suddenly, what seemed like chaos starts to make sense. Knowledge like this doesn't just make you informed, it makes you a smarter observer, a sharper thinker, and someone who can anticipate the ripples behind every headline. So remember, in a world dominated by power, money, and influence, seeing clearly is the ultimate advantage.